Hello children, today we are going to learn the lesson on investment ratios. Under this topic we will learn about the ratios potential investors might use when making investment decisions. Alongside the ratios used to assess profitability and liquidity, the investment ratios analyze the performance of the company in relation to returns on investment and the level of dividends given to shareholders. Go through all the slides with a very good attention. Write down the notes provided in the slides and do the sums with a good understanding after listening to the video. Okay children, now we will look at the learning objectives of this lesson. First, we will have a revision on the ratios you have learnt in the AS syllabus. Second is to learn how to calculate and interpret the investment ratios. Children, you know that the investors are the people who will invest on businesses to continue with the operations. Investors won't just invest on a business. If you wish to invest in a business, what sort of businesses will you suggest? Yes, at the same way you were thinking, investors who are willing to invest millions in businesses would consider few factors. Earnings per share, market capitalization, share price, dividends. So to comprehend a business, investors would prefer the investment ratios of the business. As a quick warm-up, you are required to do these ratios and find the answers using the income statement and the SOFP before we move to the next slide. So pause the video till you calculate the ratios. Okay children, now you can compare your answers with the answers given here. I know you were able to get all correct. Now we will step into the new area of learning. Under investment ratios, you will be learning 6 types of ratios. Earnings per share, price per earnings ratio, dividend per share, dividend yield, dividend cover, and return on capital employed. We will look at each of the ratios one by one. Earnings per share. Earnings per share is the profit earned by a share. This is from the shareholder's perspective. Earnings per share would be calculated for the ordinary shareholders. So we need to deduct the preference dividends from the profit and then consider for the calculation. The number of shares considered would also be the same way. Only the number of ordinary shares will be considered. The earnings per share could be calculated when we divide the profit after tax minus preference dividend by the number of issued ordinary shares. Price earnings ratio. This ratio measures how much a shareholder would be earning on each pound he has paid to buy the share. For this ratio, you will divide the market price per share over the earnings per share. The shareholders or the investors would want to know how profitable a company is and will be in the future. PE ratio would be used by the investors as they would require to know whether they are paying a fair price as share price in order to buy shares of a particular company. There is no standard benchmark for the price earnings ratio. It all depends on the industry. Dividends per share. This ratio would calculate how much dividend is being received by the shareholders. Higher the ratio would be better. This is because high dividends would attract the investors as this is the income they earn as an income source. We need to divide the total ordinary dividend paid by the number of issued ordinary shares. Note that only ordinary shares are considered here. Dividend yield. Dividend yield measures how much a company pays out in dividends each year. In other words, it measures the amount of cash an investor might receive back for the amount invested in a company. This would be higher the better. To calculate the dividend yield, you will need to divide the dividend per share by the market price of a share. Dividend cover. The dividend cover ratio measures the number of times a company can pay its current level of dividends to the shareholders. Profit after tax minus preference dividend is being divided by the total ordinary dividend paid to calculate the dividend cover. Note that this ratio is expressed in times. Generally, it is accepted that a dividend cover above 2 times is good. A dividend cover of 2 times means that the company could pay the dividend twice from the profit of that year. While a high dividend yield may attract investors, the dividend cover may be low. This could mean there is a greater possibility of future dividends being cut. Dividend cover does not take into account the company's ability to pay a dividend in cash. For example, with 3 times dividend cover, a company could theoretically pay 3 times the dividend. However, the business may not have sufficient liquidity to do so. For example, a company with a shortage of cash may find it difficult to pay dividends. In this case, the dividend paid may be lower and the dividend cover may be higher. Return on capital employed. Yes, you have learned this already in your A syllabus. That is because this ratio is considered as one of the best profitability ratios. In addition to that, ROCE can be used by the investors to determine whether a company is suitable to invest in or not. However, this ratio measures how efficiently a company is using its capital to generate profits. Children, as you know, the formula we can use is profit before interest over capital employed into 100. A higher ROCE will be more favorable as it indicates a more efficient use of capital employed. Now we are going to start a past paper question. 2018 January question 5. Before starting the question, read the previous slides and understand while listening. Okay, now we will start. This question requires us to find the ROCE, earnings per share, dividend cover, price earnings ratio and dividend yield. Look at the information given in the left side of the slide. Now we will carefully pick the necessary amounts required for each formula. Part A, ROCE. Always remember to write the formula. Okay, now for ROCE, we need to have the profit before interest and tax and the capital employed. Go to the question and check for these children. In the information, the profit given is before tax but after interest. What does it mean, children? It means we need to add back the interest in order to cancel its effect which has already taken place. Have they given the interest? Yes, they have given the interest but indirectly. Did you recognize? The 8% debenture has a hidden interest of 8% on the debenture. 1.2 million into 8%. Use the calculator to get the answer. The answer is 96,000 pounds. Then we have to find the capital employed. By now you should know what capital employed is. Capital employed is the capital invested plus the non-current liabilities. According to the information, we need to consider issued share capital plus reserves and debentures as a non-current liability. Issued share capital is not given in value. So now we need to get it into value. The number of shares and the share price is given. Multiply both, you will get the share capital value. Now you can use the found figures, put them into the formula and find the percentage. The answer is 5.08%. Part B, earnings per share. The formula to calculate this is profit after tax minus preference dividends over issued ordinary shares. The profit we have is before tax. We need to get the profit after tax by deducting the tax of 92,000 pounds from the profit of 412,000 pounds. Moreover, we need to deduct the preference dividend as well. Now we will calculate the preference dividend. Have they given us the preference dividend? If not, how can we calculate it? Look children, number of issued preference shares are 4 million. The value is 4 million into the share price, which is 0.5 pounds. Use the calculator, you will get an answer of 2 million pounds. Out of this, 6% will be the dividend. Again use the calculator, 2 million into 6%, it is 120,000 pounds. Issued ordinary shares we need is the number, not the value. It is given as 8 million. Now put all the relevant figures into the formula. The earnings per share is 2.5 pence. Part C, dividends per share. The formula is total ordinary dividend over the number of issued ordinary shares. The ordinary dividend is being given in two forms, as interim and the final. Children, interim dividend is paid at the mid of the year and final dividend is paid at the end of the year. To get the total ordinary dividend, we need to add both of these. Again, we will consider 8 million as the number of ordinary shares. Finally, the dividend per share will be 2.25 pence. Part D, dividend cover. Profit after tax minus preference dividend divided by the total ordinary dividend. We already know both numerator and the denominator. So put them in correct place in the formula. You will get the answer as 1.11 times. Remember, dividend cover is answered in times. Part E, price per earnings ratio. This is calculated using the formula market price per share over earnings per share. Again, the information can be directly obtained. Market price per share is given in the sum and the earnings per share is already calculated. Now you can easily get the answer. The answer is 36 times. With the understanding of the lesson, now it's time to test yourself. Take 15 minutes and complete this question. Finish this and then we will move to the other slide. This is a small assignment for you to do. You are free to use the internet and do the requirement. This task is to improve your communication skills and decision making skills. Here are some exam hints for you. I have mentioned some of these during the video. Read and keep these in your mind very well. This is the summary for our lesson today. This will be easy for you to by heart these ratios. So start now. Here are two references for your better understanding on ratios. This is the end of the lesson, investment ratios. See you soon children. Stay home and stay safe.